Welcome to the tutorial video for eWaves Live. In order to get started, from ewaves.com, just click the Login button, and this will take you to live.ewaves.com. Now, alternatively, you could just type in live.ewaves.com, or you could bookmark this to jump to it in the future. You'll notice I'm already logged in, but if I wasn't already logged in, then it would prompt me for an email address and a password. Now, if you have any problems with using the login, then just go to ewaves.com, scroll down to the bottom, and there's a Contact Us section right here. Email us, and we'll get the issue resolved for you as quickly as possible. All right, let's get started. So the first thing you'll notice is we can search for markets or we can browse markets. So let's hit the Browse button. Now, even when in browsing mode, you can continue to search. The search area just moved up here to the top. So as you can see, we got 575 results. Now, this is a demo site that we're doing for the tutorial video. On the live site, we'll have many more markets covered than this. And of course, there'll be more and more markets coming as you request markets. So if there's a market that we're not covering that you want, just go to ewaves.com. Again, go to that Contact Us, shoot us an email, and we'll get it added. So we expect the number of markets to increase over time considerably. Now, if you want to filter these results down, the easiest and first way to do that is under Markets. We have different regions. In this demo version, there's only the US region, and then you can just select the asset classes that you want to see. So stocks, for example, now we're filtering by US stocks. Now that got us down to 405 results. Maybe we only want stocks and ETFs, so we get those two groups together. Or maybe we wanted everything, and we just add in all of these. But you'll notice that's the same as if we hadn't selected anything, because when nothing is selected, the default is just to behave as if every market was selected. So that's basically how that works on the left-hand side over there. So over here on the right, the first thing I want to talk about is the grid size. So you can have lots and lots of markets visible at a time, or you can have just a single market visible at a time, or the 4x4 view. It's kind of up to you, whatever you prefer. Now, on this sorting by thing at the top, we can sort ascending or descending by various attributes of the market. Now, there's a lot of attributes here. We're going to go over some of these when we talk about the Wavefinder, and they're explained in detail in the FAQ. But for the time being, the most important one is Ellioticity. Ellioticity is the degree to which a market is adherent to the Elliott Wave principle. So you can see AKAM is first in the list because it has an Ellioticity score of 56, which is quite high, then 53, then 53 again, then 52, and it keeps going down from there. Now, one thing to note about Ellioticity, if we go to, let's make this chart a little bigger here, is that, when someone says, hey, this market is doing good Elliott waves, what does that mean? Over the past few weeks, over the past few months, over the past 1,000 years? So the way we've defined Ellioticity is to be a scale invariant number, which means it's referring to the quality at all scales simultaneously. So if you zoom in, we've got good Elliott waves going on here. If you zoom out, we've got a good picture here. If you zoom out, we have a good picture here. If you zoom out, we've got a good picture here. So what this assures you is that with a really high Ellioticity number, that's important because it's not just about the quality of these waves here. It's also about the quality of this decline, because that gives these waves context. So that context is important. So this number has all the context that this chart has in it baked into a single value. So that's kind of how you want to think about and use Ellioticity. Now let's go to the upper middle here to the search area, and let's search for something. As you can see here, we got Las Vegas Sands Corp. Let's just go ahead and search for that. The symbol is LVS. We can type in LVS, and you can see it pops up here. Or we could just type part of the name. Let's type Vegas, and that'll take us there as well. So let's just click that. Now what this does is it goes to a page that's just for this particular market. You can see at the bottom right, we have the Ellioticity score, so that can orient you as to how high a quality of a wave eWaves thinks we're dealing with. The URL here is specific for this particular market, so you can email this to a friend that's using eWaves Live, and they'll be able to jump right to that particular market and the particular zoom level you're looking at on that market. So you can say, hey, what do you think of this particular Elliott wave? So that's very convenient. Now, if we go back here, back to our browsing window, we can actually just click directly on the title, and that will also take us to this page that is specific for this particular asset. So if this view is not big enough for you on this particular chart, you can always hit the full screen button. This maximizes it to take up the entire browsing area. Now there's a trick. Your web browser itself also has the full screen mode. So if we enable that, the browsing area will take up the entire screen. So that's with F11. Almost every browser has that feature in it. So this allows you to get the biggest possible view of just this particular chart. And then you can take a screenshot or just kind of navigate around the chart however you would like. Now is probably a good time to talk about the zooming really quickly. This little dotted line indicates where we are going to zoom into. So if we click plus, we're zooming in. We click minus, you'll see we zoomed out, and that's the area we were zoomed into before. So that's what this dotted line means. It tells you the zooming area. So let's undo this full screen F11, and let's go ahead and X out of this. Now, another way to get to this full screen mode, if we go back, if we're looking at the chart here in this 4x4 mode, is just to click directly on Maximize Chart. Okay, and that'll jump us right to this full screen view right here. And again, F11, which makes this even bigger, that is a browser level feature. So I can even push F11 here. And as you can see, the browser takes up the entire screen. So that's just that's a browser level feature. Now, because I turned that on, it actually got rid of the sidebar. We can retoggle that anytime very easily. So that's not a big deal. Let's talk a little bit about the labeling on this chart. This labeling does not use Roman numerals. Instead, it just uses regular numbers and letters. So this should be very simple and intuitive and follow the Elliott Wave Principle book quite closely. Now, absolute degrees are actually not a concept in E-waves. So it doesn't know about cycle and supercycle and minute and minuet waves. Okay? Instead, it just knows about relative degrees. So on any particular chart you see, red is always going to be the largest degree on that chart. Blue is going to be the next larger degree, and blue is relative to red. It is the component waves of the red degree, and then so on and so forth all the way down. So just because something is red, again, doesn't mean that it has to have any particular absolute size. It just means it's the largest degree on this particular chart. Now, you may notice that this red one is cut off. That's because it's not considered relevant for the zoom level you're looking at. It's not really relevant for this picture. All that matters is 1, 2, 3, 4, 5, and now you're going to bounce. If eventually that market goes up quite a bit and there's a red 2 that gets put into here, suddenly that 1 will become relevant because now you're forming a larger picture, and then the sizes would be reduced on that chart so you'd be able to see the 1. So it's just something to know about. This is intentional, the way that it's cut off here. And in some cases, there may be additional labels that get cut off. It just depends on the zoom level you're at. If you can't see them, you can always zoom out to be able to see them. All of the eWaves' charts have tooltip data embedded in them. So if you hover your mouse over these labels, you'll see a date and a price listed. And that's mainly there just for convenience purposes. Now, don't worry too much about the precise time that's listed here. That's because behind the scenes, these are daily bars that are being passed in that eWaves is processing. So right now it just uses 6 a.m. and 6 p.m. to put the high and the low, depending on which one it thinks came first. And that gives us our synthetic price points that it can then run Elliott Wave analysis on. One particular label in this chart which stands out is this 0 label here. First of all, it's the only 0 label in the chart. It's the largest degree. This is the origin of the chart, and all charts have this origin point. If we zoom out, it'll kind of make a little more sense. If we had started counting from here, let's say, and we tried to count up into this high, obviously the market would have broken down, broken below this low, and invalidated the wave structure that we were trying to do. So this is really the only reasonable place to start counting from in this particular chart. Now, there is one alternative to trying to count from somewhere further along the chart, and that's by counting from somewhere before the chart ever happened. And we actually do this in the Dow Jones Industrial Average by pre-pending data for the London Stock Exchange going all the way back to 1697. We also take that data set and use it as the basis for several other major indices like the NASDAQ, which didn't emerge till much later. And this gives us a larger picture of the NASDAQ by having sort of a synthetic history of the NASDAQ. But for most individual stocks, we don't really have the ability to create a synthetic history. There's just no way of knowing what that history would have been. the last thing I'd like to bring to your attention with this chart is the Ellioticity reading. This one sits at 53%. As of today, that's about as good a number as you're going to get on real-world data. If we had completely artificial data that was constructed to be a perfectly idealized Elliott wave, then that may score closer to 100%. But nevertheless, like I said, this is about as good as it gets. Now, we do reserve the right in the future as we upgrade the engine to change the definition of Ellioticity. And so what constitutes a high or low number may change. However, if that happens, we would first of all notify you. We would update the FAQ. So if you go to ewaves.com, go to the FAQ, and then scroll down, we would just update the section here of what constitutes good and bad values. And finally, probably the easiest way to know whether it's a good or bad value is just look at the top ranked market, 56. So that right there orients you saying, okay, even the best markets of all don't do much better than around 50%. So that tells you, okay, this must be a fairly well-conforming market. Now, just for fun, if we want, we can go back here to the list of all markets, and we can actually flip the sort by upside down. We can see the worst ranked markets. Now you can see what it means when a market has very poor Ellioticity. It's just not adhering to Elliott waves at all for this particular trend, which is fine. It just means that we won't try to forecast it. We'll just ignore it. And the program tells you that. It says the Ellioticity here is 1%. Because it's so low, this is not a market currently being driven by social mood or herding behavior. So therefore, we should just ignore it. We should go and focus on the markets that have high Ellioticity. All right, and now what you've all been waiting for is let's talk about the Wavefinder. So let's just toggle the Wavefinder to turn it on. Now let's go to full view here, just so we can get a little clearer view of this. Okay. So the job of the Wavefinder is to find waves that are currently unfolding today. It's not really meant to find old waves like this fifth wave down here. This is ancient history. This is only interesting as far as it contributes to the Ellioticity of the larger picture here. So in terms of currently unfolding waves, what have we got? Well, if you know your Elliott waves, you've got 1 down, you're forming a 2 going up, right? And then you've got B here. You got a C from that B, right? A blue C heading this way. If we zoom in a little more, we've got 1, 2. You got a purple 3 heading this way. You've got another 1, 2 here. You've got a gray 3 heading up. Got another 1, 2. You got a red 3 heading up. So there's a lot of waves that are currently in progress, okay, in this market. But there's one wave that is kind of the largest of all of them, which sometimes I call it the super wave. Basically, the largest pattern, which is in red, 1, and then this red 2 up here. What comes after 2? 3. So obviously there's not enough room on my screen. I'd have to move my mouse off the screen to show where 3 would go, but there'd be a 3, 4, and a 5 all in red. You have to kind of imagine them. And so that's what this is talking about. This is the super wave here. Now, it's not located at where the super wave is going to head. It's just saying, hey, it's going this direction. So this is just saying, hey, it's going to go to here and beyond. Okay. It's kind of giving you, orienting you as to what this super wave is doing. So why did you get the super wave when you have all these other waves that are unfolding? Well, it's because you didn't put any criteria in here. Just like when you select a market, if you leave all of them blank, you get all the markets. When you don't give any information about the wave you're looking for, it finds all the waves. And the Wavefinder's default, when you're looking at all the waves, is to return you the largest of the set. So when there's more than one wave that it found, you get the biggest one, in which case it's the super wave. This ends up being really handy, actually, when you don't have anything in here to get the super wave, because the attributes here, when the Wavefinder is on, correspond to the wave you're looking at, as opposed to just the market in general. But if you'll notice, if I toggle the Wavefinder off, the Ellioticity didn't change. Now, the zooming changed. We can kind of zoom back out. But if you turn it back on again, look, 56, 56. That's because when you're just looking at markets and there's no Wavefinder enabled, the Ellioticity here that you're getting is the Ellioticity of the super wave. Okay, but because it's scale invariant that we explained earlier, the superwave's Ellioticity is actually pretty handy, even for, judging what's going on a very short-term basis and other things like that. We sometimes call this superwave Ellioticity the total Ellioticity of the market. Okay, so you can see the superwave for that. This superwave is heading up, this superwave is heading down. So that's kind of how the superwave works. Now, even with the superwave, I can at least go ahead and show how the sort by works now and show a few more things. Obviously we've been sorting by Ellioticity, but let's sort by something else. This is an interesting one, linearity. Now, these are attributes. Earlier I said they were attributes of the market. Now I'm going to be more precise. They're attributes of the wave you found with the wave finder, which is by default, when there's nothing selected, this superwave. So if we were to say linearity, okay, now what we're looking at is the market that is moving in the most linear fashion, or more precisely, the superwave that is moving in the most linear fashion. That means that the retracements are mild. It's moving in very much a line-like manner. And in fact, it's 88% linearity, which is very, very high. So these are really properties of waves. And when you're selecting the superwave with nothing, you can think of it as a property of the overall market. The superwave, of course, is not very interesting. Sometimes it is. I guess it depends on your time horizon. So why don't we go ahead and add in some attributes? So let's click Add Attribute for the wave. Now we select the attribute from the drop-down list. There's a lot, but don't be too intimidated. They're pretty simple. So why don't we choose duration so far? This is actually one of my favorite ones because this is how long the wave has been going on from the start of the wave to the present day. Okay, so this gives you an idea of the window you're looking at, an actual picture that's already happened, as opposed to, say, duration expected, which is how far is this wave expected to ultimately travel. Now, duration expected might be really good if you're trying to find a wave that, say, you're expecting to last for a long period of time, but maybe it's only started yesterday. So it could be a major turning point, whereas duration so far is almost certainly going to give you a wave that has been in progress for some time already. So the duration so far is good. If you're interested in trends, for example, this might be better, whereas duration expected is more for looking for major turning points. So by default, it's going to give you the minimum and the maximum. This maximum 65504, don't have to worry too much about it. You can just type in a bunch of 9s and the system will automatically clip it for you at that maximum number. This is just the maximum representable number of days in the system. Anything that hits that number of days or exceeds that number of days gets rounded back into that number, clamped to that number rather. So one thing that I particularly like to do is around 100 to 400 days. And bam, okay, now this is kind of interesting. We actually ended up with the same chart we were looking at before. The Ellioticity number is now reflective of this C wave that's unfolding. I believe it's actually the same number in this case. But you'll see we've now selected a different wave. That's because wave C here fits this criteria. It's been unfolding between 100 and 400 days, whereas obviously the superwave's been unfolding much longer than that, since, 1999. So it's not going to pick the superwave. So now we've added one bit of criteria and we're narrowing into a different wave. So you'll see here, this has been highlighted in blue. That's your cue showing you this is the area of the wave that's in progress so far. This gives you an idea of where the wave is headed. Now, if you note on here, it gives you a date and it gives you a price. This is an estimated target. However, given how little of the wave exists, extrapolating this is very difficult at this stage. It's very early on, so the target's going to be quite unreliable at this moment. As it gets closer and closer to the target, it becomes more and more reliable of an estimate of where that wave is going. Now, the location of this C is clipped by this chart data. So if we zoom out, here you can actually get a better idea of where it's estimating it's heading by extrapolating these, because it's kind of what I call a partial target. See, the price is at 347, so that's clipped just a bit below this chart level, but if you zoom in, it's clipping this label to keep it within the visible boundary so it doesn't exceed it. Now, we could choose a different duration if we wanted to focus in on a different wave rather than this one. So maybe if we did, let's see, 50 to, I don't know, 100. Okay, now there's that third wave we were talking about. And remember, we were talking about all these waves just earlier, the 1, 2, and there was a 3 going on. Well, there's your 3. As you can see, it's estimated to go to $29. So again, it's getting clipped here because it's not a target on this chart. If it was a target, it would go off the chart, which is silly. That's why there's an arrow there. But if you zoom out, it will put the price at the appropriate level if it's able to fit it in. So again, there's kind of giving an idea of where that market might be headed based on this. But again, I kind of like the 100 to 400 personally for the time frame that I'm usually most interested in, which would match about this wave that you see right here on the screen. So let's talk about another detail about Ellioticity that's important to know. So the Ellioticity, again, of this number right here corresponds to the wave that you found. And again, when the wavefinder is off, you're finding the Ellioticity of the super wave, in which case this is representative of kind of the total Ellioticity of the market. But wavefinder's on. We've also specified a duration. We found this particular subwave here that's unfolding. So in this case, this corresponds to that particular wave. Okay, so here's a detail that might be important. This wave C has been unfolding for a little while now. So there's some structure here from which we can gain an Ellioticity value from. However, imagine in the very early stages, like just this first wave up, in the very early parts of wave C, there's not much structure from which to determine the Ellioticity of wave C, right? I mean, especially like this very first little move, it's just a line. There's just no detail there. So how do you know whether or not this is wave C at this point? It's simple. You don't know it based on what's going on here. You know it based on what happened declining down into that point. So it's this move here, this decline, what determines the Ellioticity of the market at these early phases. And then as the wave progresses, more and more of the structure of the wave itself is incorporated into this value. So this number does not correspond just to this window, just to the wave itself. It does incorporate some extra context into that number. And if you want to know more details on exactly the context that's incorporated, then just go to ewaves.com, look at the FAQ. We'll have a section there that addresses the specifics of exactly what context is and is not incorporated into that number. So you can see here, just to drive the point home, if we go to 50 to 100, we go back to that wave 3. All right, there's purple wave 3. This has a different Ellioticity number because this is a different wave. However, this does incorporate more context because, again, wave 3 started here early on, so it does incorporate additional context in that Ellioticity number for wave 3. Now, the main reason to understand this detail about context is just because it eliminates confusion about Ellioticity, because sometimes this picture is good, but the context is poor, and so the wave has a low Ellioticity, even though the internals are actually quite good, and vice versa. And so in this case, because the Ellioticity overall is quite high, everything's good, the context and the wave itself, but that's not always the case. So generally, you'll only run into this with the lower Ellioticity numbers where you have this kind of a mismatch, but just be aware of that so you're not confused ever about the Ellioticity number. If you're looking at a wave and you're like, hey, this wave actually looks pretty good so far, but then zoom out one and realize, oh, the context is terrible. Oh, that explains why the Ellioticity is low on this. So just keep that in mind. So let's play with the wavefinder a little bit more. First of all, let's go and look at some slightly larger waves. So we'll go back to that 100 to 400 day time frame, in which case it gets us back to this wave C that's in progress here. Now let's say we wanted to look for a slightly different picture. Instead of looking for, say, 1, 2 with 3 in progress, let's say we wanted to find an unfolding wave where wave 5 was in progress. Okay? Now, if we go to the attributes for this particular wave, this wave C, you'll notice, again, there's a lot to choose from here, and these are all covered in the FAQ. But there's actually nothing here that will allow us to specify the label of the subwave, of the child that's currently unfolding. To do that, we need to add a context wave. So what context waves do is, in addition to the wave that you're looking for, you can specify attributes for waves that are associated with this wave. Let's do add context, select what kind of context. There's a lot of options here. Now we could do the prior wave. Sometimes people want to say, I want the prior wave to have a type of a triangle, let's say, because the wave you're trying to find here is coming out of a triangle. We might want to specify the parent wave to be a third wave so that whatever wave you're looking at and you find here is within a larger third. In this case, we want to specify something about the child. This is 1 degree smaller versus, say, grandchild, which would be 2 degrees smaller. So let's do child. And in this case, we want to say the label of that child, you can add labels, is going to be a wave 5. Okay, let's select that and then see what we got. Okay, this is a commodity, Robusta coffee right here. And now you can see we have 1, 2, 3, 4, and we're heading down in a 5th wave. So using this style right here will allow us to find basically 5th wave setups where wave 4 is in place and wave 5 is in progress. Now, you could also add more attributes here if you wanted to. You could say something like, you could go to complete here and you could say, I want it to be, only 50% complete. Another interesting one might be to say the retracement so far is no more than 30%. For example, you might want wave 5 not to be too far in progress, or you may want the opposite. You may say it's 80% done because I want something that is almost complete and highly likely to go to that new low, even though the overall distance is small. It's kind of up to you. There's just a lot of options here for what you're looking at. And again, this arrow here shows you the direction that this wave is heading in. We have an elliotticity of 57 for this wave, which is very high. And we also have this target here. Again, if you hover your mouse over it, it will give you an idea of where it thinks this wave is going to be headed. But again, this target gets more and more accurate as the actual subwaves of wave 5 unfold, and then it can refine this target. So targets are always very rough, and I just want to be very clear about that. The most important thing is the direction that the wave is heading in, and of course the structure and elliotticity. All right, so now we've used the wave finder. We found this interesting situation in Robusta coffee. We might want to track this chart on a day-to-day basis because, of course, as new prices come in, this chart will update itself. So in order to do that, we'll probably just use the search feature. So you would come in on a day, maybe you get to your home screen here and just type in Robusta, jump right to that market, and then just see how it has evolved. Now, just so you know, all of these charts update at the end of day. Right now, the current update time is set to 9 p.m. Give about 15 minutes for processing and uploading. So if you log in around 9:15, you'll always get everything latest for that day. Again, that's Eastern Standard Time. However, we, of course, might change that time in the future. So if you go to the FAQ, there's a section here of does eWave Live cover intraday? We're not doing that quite yet. It tells you right here the updates occur at 9 p.m. Eastern Standard Time. So we'll just update the FAQ here. So again, don't go by necessarily what this tutorial is telling you because things might have been updated since filming this video. I would go check the FAQ out and we'll talk about it in there. Now, of course, if you're already logged into eWaves Live and that time has passed and you want to get the latest of everything, you just go up here and hit the refresh button for your page, and it'll reload all the data files, which will have been updated by the server through that next day. And so I think that concludes our tutorial of eWaves Live. I certainly hope that you found the answers to most of the questions that you're looking for. I think we covered everything in this tutorial. Probably the only thing that we haven't covered is talking a little bit about software interop. This is something where if you're an eWaves Live user and you want to actually get at the underlying data behind eWaves Live for automation purposes, we can help you do that. We'll try to keep the FAQ updated and add sections on that, but mainly that's something that you'll have to work with us directly on. So I hope you enjoy eWaves. We put a huge amount of work into building this engine. It really has been a decade-long process of research. I think the number one reason to use eWaves and eWaves Live is because when you use the Wave Finder and find these high elliotticity markets, I think you'll find that the quality of the wave counts is really beyond anything you'll find anywhere else. And again, that's because of the research that we did into real world markets, not just looking at ideas or opinions, but actually studying real historical data. So that said, we would appreciate feedback from you. So please, if you have ideas for features for eWaves Live, please just email us. And also, if you are using eWaves and you find anything with the analysis where you're like, I think this market should be analyzed a different way, then just send us an email on that as well. We'll research it. It may lead to improvements in the engine. So this is really an ongoing process. So in conclusion, I hope that you enjoy eWaves Live, and we'll certainly continue on and continue to make eWaves Live as good as we can.